Hey traders, Nick Shaheen here looking at Activision Blizzard reported earnings on Thursday, but boy was it a fun one. Let's see if we can concentrate on it. Look at the size of that candle, and something went awry because they were supposed to report after the market closed, but Dow Jones made a mistake. They released the report, and I think they even released the wrong numbers, so the stock cratered and went down to 64. Only then they retracted and said, whoops, no, here's a set of numbers. And then, of course, management was forced to actually release the earnings during the market is open. They halted the stock, but the technical damage had been done. Damage in quotation here. All right, so let's look at it. As far as the fundamentals are concerned, the report wasn't bad. In fact, they beat on all metrics. They even raised guidance for full year 2018, but they kind of like weighted it towards the end, meaning they said, okay, we're going to raise guidance for the full year, but next quarter might be a little iffy. Maybe that caused some people to freak out a little bit, but in my opinion, it's par for the course. What's wrong with saying that? It's basically they're saying, hey, things are going to be better than expected this year, but it could be a little bumpy for the next 2 or 3 months. That's a natural statement because we are in the middle of a gigantic battle between headlines and fundamentals, right? Because we have headlines flying left and right from the tariff wars here, with China, with Europe, our allies, so-called. So a little bit concerned for the next 3 months is normal. If they didn't say that, they're being reckless. So anyway, that's my interpretation of it. If they want to sell it, I'll buy it. So here's the thing. There is technical worries, though. Why? Because aside from the fundamentals, okay, so it's not dirt cheap. I think they sell, 50, 60 PE as far as trailing PEs. And so if things go sour with the markets in general, it could be a little bumpy for stocks that are not cheap. But it's not like outrageously cheap relative to the arena it's playing in. Speaking of arena, esports is gaining popularity, so the whole sector should stay healthy for going for the next 5-6 years at least. So no worries from the fundamental aspect, but like I said, there is some technical worry. It's great that they've been bumping along a floorboard and they've been defending it the Bulls Day, and it's a pivot point. It's not a hard line in the sand, although recently it has been, but it's more like a zone for me. I can draw a box around this zone and say, okay, there has been in the last 10 months eyeball consolidation zone, a pivot point from which they broke out emphatically, and they have defended that neckline several times. Yesterday's candle is the extreme example of said zone. So that's the good news, that they've been bouncing support. But what happens if they lose the neckline? Technically, they can fall and overshoot to the downside. Okay, so this is kind of like a miniature situation of it. They overshoot to the downside. So 60, 58 is totally possible, just from the technical perspective. But would that be a good buying point? I don't know. Those who missed it here, which was another little consolidation step, they would probably say, you know what, I missed it here, I'll buy it. But why is this holding? Because everybody that fought over it here is fighting over it here and defending it. So those who bought it and made money here, when it comes back to here, say, you know what, I made money last time I bought it here, maybe I should buy it again. That's the concept of it, in my opinion. My plain, simple English interpretation of this price action. So indeed, this looks like a head and shoulders. I guess I should have said it. Here we go. Lesson in head and shoulders. Main Street explanation of a head and shoulders. All right, so bulls break out. Bears say, you know what? No, I can bring you back to where you came from. The bulls say, I can do it again, and they do even better. Bears say, nope, I can bring you back to where you came from. Bulls say, you know what, I've done it twice already, let me do it again, and then they fail, and they fail miserably. a lot worse than the middle. So it's basically one shoulder, and head in the middle. Technically, the dip should be the size of this. I'm not a technical analyst, but I do understand the technicals and I use them quite well to my purpose. And look, it's even lower than what I said. But I don't go straight to that. Eventually, it may go there. I look left to see where was the last bounce. So if it's going there, it will have a rest stop here somewhere. That's my interpretation. Anyway, that aside, it's a great buy. It's a decent buy here if the markets hold up. In general, it's a great buy if it's a lot cheaper than here. So for me, I can buy it for upside hopium, but I would leave myself no room for error. I can do that using the options market a lot easier. And one way to do it is, instead of just buying calls or call spreads, where time works against you, I'll sell puts or put spreads where time is on my side, because somebody's buying a lottery ticket from me. And if I choose my levels carefully, they're going to lose money and I'm going to win. That's basically the idea. So if I'm looking to buy it here, wouldn't I be happy buying it here? Of course I would be. So therein lies the opportunity. All right, so this has been just a look at Activision Blizzard. If you have any questions, you can reach me via email, sellspreads@gmail.com. That's sellspreads@gmail.com. Nick signing out.